All right, back to work. Boy, fantastic job today. Got that beautiful bear trap we talked about in last night's video. And now we have this monster range breakout into the closing bell this afternoon. Range breakouts tell us breakout pullbacks is probably where the big money is made tomorrow. But there's something else right now. It feels like these buyers might be getting a bit aggressive into the latter half, second half of the week this week. So I have a couple aggressive bear traps on my radar for tomorrow as well. We'll kick this up a few more notches in tonight's video. So we'll talk breakout pullbacks. We'll talk about aggressive entries for tomorrow as well. This will be a masterclass on timing perfect entries and exits. So you're going to love tonight's video lesson. We're going to cover the entire strategy from top to bottom by the time we're done tonight's video. So as always, thanks for tuning in. Charts are ready. Enough of the intro already. Let's get our hands dirty here and go make some more moolah on Thursday morning. S&P SPY ready to go tonight. NASDAQ triple Qs are always ready. I have 3 clues on these charts telling me where I think the money is made tomorrow morning. First clue is here on the hourly time frame. We talked about this last night on the video. Bullish market into a range, rotating up off of that low. Same thing over on the NASDAQ triple Qs. Bullish market into a range. You know what ranges do, right? They love to rotate. That's why I said earlier, it seems like these buyers could be getting on their horse, if you will, right? We might have some aggressive moves here over the next 24 hours. I want to make sure we are ready for it. Most important thing though, the first clue is on the higher time frame, the hourly chart. We're going to use this for our overall directional filter. We are bullish right now on the higher time frame. The second and third clues are down on the tick chart, because tick charts, this is where we time the entries. The higher time frame hourly chart is used for direction, but the tick charts, we time the entries. 7,000 tick chart, upper left-hand corner. And in case you're watching for the first time right now, my friends, that is the 21 EMA. It is pretty much the only indicator we need to make money each week. There's 2 really big clues on this tick chart right now. The first clue is pretty easy, right? That range right there. I talked about this earlier in the introduction. Anytime we see a range breakout, what do we expect? Yes, a breakout pullback. So I got 51, I got 44, 41. Definitely mark that area on your chart this week. If we don't get it tomorrow, it'll be sometime later on this week, but that level is a big money zone for us tomorrow morning. The second clue is how we're grinding higher. Notice how we popped up, we separated, strength, separation equals strength. We separate off that moving average and we're kind of grinding higher right now. Now, grinding markets, write this down, folks. Grinding markets are very strong trends. They're difficult to stop because what happens is it drags all the moving averages up along with it. Okay, grinding trends tell us 2 things. One, that channel off the highs, off the lows. Love that channel. That channel might be our best friend tomorrow, so keep that on your mind. But really the most important thing is if we keep grinding higher underneath prior swings, is usually where the best entries are. These are the more aggressive entries I mentioned earlier in the introduction. Now, the aggressive entries, these are a little bit tricky, right? Because we know it's summertime markets. Summertime markets make these big moves back and forth. So we'll talk about some of these kind of more aggressive entries here in a moment. My favorite trade right now, though, would be I would love to get a nice deep pullback here and look for a bear trap right here, right? Wait for that price to pull back to that 21 EMA. Now, I know I said earlier, I love this area, but I'm not going to pick a bottom on this, right? I'm not going to blindly buy that support zone. What I'll do is I'll use 2 entry patterns. One is a simple bear trap, right? Wait for the pullback, let bears once, higher high, bears twice. Once those bears get trapped in there, think about 2, that range right there, the amount above, the amount below, symmetry. If you're going through my free video classes right now, we call those pendulum swings. So I love this area down here for that deep pullback. Get it to pull back. It'll be deep enough to fool some rookies, make them think we're reversing here. Once those bears try twice, I'm going to basically buy into their stop losses, because if you're caught short and you get bounced out of a short trade, you have to buy your way out, right? Those stops get run. That's a buy order, right? Those are buy orders coming into the market right there. It's called a bear trap. Now remember, where's the market want to go? On a deep pullback like this, the buyers want to go back and take out that high. So as we go up and take out that high right now, I'm looking for an add-on. That same separation over there, that same separation is exactly what I want right now, right? Nice deep pullback, get a shallow pullback that separates off that moving average, higher high in price. In our trade room, in our free video course, we call this a bear trap and add-on target back up to retest that high. Now, one variation of this, we may not get that bear trap down there. Okay, summertime markets, be aware of this. Oftentimes we get these really sharp moves back and forth. We may not get that bear trap entry down there. If it V bottoms off that low, it'll almost always begin to grind going higher. Now remind me again, what do we do when a market grinds up like that? Two things, right? One, find we call these pop and grind channels, and two, find swings and get in underneath prior swings. A lot of examples of that entry pattern in our free trading course, right? So those V bottoms, they're not my favorite. Again, I would love to get a bear trap down there, but we take whatever the market gives us. And oh, don't forget too, oftentimes we do see that strong run down. It'll pop up and make another leg lower, right? Remember, we're not a bear market right now on the higher time frame. We're a bull market. So if we run down, we might get that bear trap down there. We might get that pop up nice and strong. A lot of times these will be a winning trade, right? 1-to-1, take that profit. It's a winning trade. But oftentimes, though, especially during summertime markets, strong run down, they give us another leg going lower. Remember, these retest trades, when it goes back and retests that low, anybody who sells up here, where's their profit targets? Their profit targets are where? Back down to retest that low, right? So sellers up here, very important, pay attention, become buyers down there. Is this a good place to be selling? Of course not. You're right in that breakout pullback zone. We're a bullish market overall. At this point, do it again. This is often a gift from the trading gods. Bears try once, bears try twice. This will feel very bearish. It's not though. It's a bear trap. It's an add-on, and we're looking for that run where back up to retest that big time high overhead. All right. Love those retest trades. So love the breakout pullback zone, bear traps, retest trades, add-ons, maybe a V bottom. Here's an important question though. What if we see a shallow pullback? Shallow pullbacks are a little bit tricky because we don't want to buy too high. I want to cover that in 2 seconds. Before we do that though, if you're watching for the first time right now, I know a lot of you guys watching right now, you guys know these patterns, you're making money with these patterns already. But if you're watching for the first time right now, this might be a bit over your head, might be a brand new strategy, a new language. Don't you worry though, I teach this entire roadmap, the entire system in my free trading course. In fact, I have a ton of examples of all of these entry patterns I'm talking about in this video. Guys, bottom line, the markets are way too good right now not to be making consistent profits. So what I'll do is I want to teach you guys how to time these entries properly. I'll put a link up top here for you. Upper right-hand corner, hit that link that popped up there. Take that free trading course because the strategy I teach in that video course will teach you a simple trick we use in our members trade room each morning that literally tells us exactly where the winning trades are going to be each day. More importantly though, we make our money by timing good entries, right? So I want to teach you all my 4 favorite entry setups. You'll learn traps, you'll learn add-ons, you'll learn all my favorite entry techniques so you can time better entries, get your confidence back in your entries again. Guys, if you're still missing the best entries right now, if you've lost your confidence in your current strategy, What are you waiting for right now? Pause this video, hit that link that popped up right there. You're gonna love that free course. Everyone loves all the trade examples I share in that short video series. The best part is it's completely free. Also, to be aware too, guys, I'm gonna put all the important links you need. Start first on the free video classes. Everyone loves that. Most folks start making money all on their own. I'll put the link to that in the description of the YouTube video. If you're on Twitter or X, I post a ton of charts and videos and mindset stuff on Twitter X during the day. If you're on the platform, give me a follow. Again, all the details. You'll need to learn the strategy, hopefully make a lot more money because of it. I'll upload a video tonight here, description of that video. All right, where did we leave off? Yes, one of the most important parts of this process. Let's adjust this channel a little bit right now off of these highs, bring it down around that low, right? That pop and grind channel. So that channel right now, remember all of these lows right here, all of these lows, as we keep grinding going higher here, the money is made on the low of that channel and below those prior swings. But remember, go back to the hourly chart for a second. We see a lot of these big moves back and forth, right, during the month of August. This is a very different time of the year. If you're a new trader, it's important that you understand July and August are summertime months, and that means we get these wild, wild swings here. So I love the idea of that deep pullback into that breakout pullback. So we talked about it already, but a shallow pullback. What is the problem with a shallow pullback? The problem is risk reward, right? Think about this. If I see a deep pullback, I can bear trap those bears in, and I can take a relatively small amount of risk for a much larger amount of reward. That risk reward ratio is very attractive to other traders, which improves the odds of my success because of the self-fulfilling prophecy, right? It's how technical analysis works. Okay, that risk reward ratio doesn't work as well in this scenario, right? That same entry pattern no longer holds up, right? I can't get a small amount of risk for a big amount of reward. So how do we solve that problem? We solve that problem with one very simple but very important adjustment. We get in underneath those prior lows. Same thing as before. Pull it back, let bears try once, go higher, bears twice. Again, why twice? Because I want their stops, right? I want to be buying. I want those sellers to be in pain. But I'm not going to be buying above the high. What I'll do is, if I can get that higher high in price, remember, always a higher high in price. Why higher high? Because sellers want to sell high. So it pulls back, they sell once. It goes higher, they sell twice. We always want to sell at the highest possible price, whether you're selling your car, your home, or you're selling S&P futures, right? It's always at a higher price. Sellers want to sell high. Okay. If we understand that now combine them together. Get the bears trapped in once, committed twice. I'm going to get underneath that prior swing. Now, think about my risk reward ratio now. I get my strong candle, closing back above that 21 EMA, like I teach in our free video classes. Now, risk here, reward here. Yes, that is a very attractive entry for lots of experienced traders. And the more people take it, the better it works because of the self-fulfilling prophecy. So the one thing you want to remember is that if we do keep grinding higher here right now, focus on getting in below these prior swings. And the goal is to get in really underneath two types of prior swings. One is under the major swings like these, and the other is that technical bear trap. Now, the one downside about these is there isn't much space to add to our winner, right? On a deeper pullback, I can get that bear trap down here, that two-try bear trap, and on the way back higher, I can look to add to my position because the risk-reward ratio still makes sense, right? On that add-on trade, I can still take a small amount of risk for a nice big amount of reward, right? I can add to my win. Bottom line is I can add to my winner after a deep pullback. After a shallow pullback, I'm not going to have that luxury of adding to my winner, unfortunately, right? Because we're going to be going right back up to retest that high. But that's my mindset right now as we start grinding higher, because again, like I said earlier, we may get some aggressive price action here in the next 24 hours. But here's one more question though for you. What if we start going sideways up here? You know, we've seen a lot of these recently. We jump up, go sideways, jump up, go sideways. What if we start chopping around overnight here right now and go sideways right now? Believe it or not, that is the easiest way for us to make money tomorrow. Let's talk about that now over on the NASDAQ. NASDAQ's getting lonely over here right now. I hear you, NASDAQ. And remember, in case you weren't here earlier on in this week, remember what's happening right now. We had that big bull run up in, pretty much the entire month of July, had a range right there, had that strong run down, right? And if you were here earlier this week, we said, okay, expect the sellers are going to try to hold the underbelly of that range and run this thing back down to retest the low, right? We mentioned this previously this week. Well, as I said last night in the video last night, we didn't expect those bears to be that successful because once we saw that new trading range form, that range now results in a kind of a slingshot reversal, as we call it, back up into that range. So a very interesting dynamic. You've been following along this week, a very good example of overall trend. Don't put too much faith in that deep pullback. As I mentioned last night, I thought that deep pullback was simply a healthy correction after some big move up June and July. We respect the bears trying to run it lower, but now it looks like here, that range trying to rotate higher, that range trying to rotate higher. So that's why I said they got some blue skies overhead right now, and this definitely may get a bit aggressive here for the buyers going higher. Now, I want to dive into those tick charts here on the NASDAQ. Before we do that though, if you're enjoying this video right now, please help me grow this channel, will ya? By hitting that like button and make sure you subscribe. I know we're all busy people this time of the year. It's summertime, kids home from school. I totally get that. I appreciate you all tuning in and watching my videos. So as always, thank you guys so much for all the likes, all the subscribes, all the ongoing love I get in the comment section below. It really means a lot to me, you guys, commenting in the comment section below. But enough chit chat though. Let's have those tick charts right now. Tick charts, look at that grinder. Two really big clues here on the tick charts. One big clue is that range, right? What do ranges do? They break out and they pull back. Now again, this may not be tomorrow. It may not be tomorrow because again, we're kind of grinding higher right now. But NASDAQ traders, keep that level 252. Keep that on your mind. It's a matter of time, right? It's a matter of time. It's almost a guarantee. Eventually, this week or next, we'll come back to that 252 level. It's almost a guarantee. It's almost a virtual guarantee on this. The big thing right now, though, is you can see right away here, we're popping up and we're grinding. We're grinding, going high. I've got that channel drawn on off of those highs right now, right? There are your swings. And so just as we said earlier on the S&P right now, a shallow pullback. What's the problem? The problem is risk reward, right? So risk reward ratio, buy below prior swings. Don't be surprised if we see a really sharp pullback, right? Really deep pullback. That deep pullback, don't forget, that will feel like a reversal. It will. It'll feel very bearish, but it's not a bear market. Right, it's a very strong run up. It's a deep pullback in a bull market right now. So don't take the bait on that. Let the other rookies in the market try once, try twice. We can squeeze those stops with a bear trap. And like I said earlier, right, great risk reward on that one. I can be a bit more aggressive on that one. That bear trap into that add-on, and we're off the races back up to retest that high. A lot of examples of those inside the free video class, so make sure you sign up for that. Again, link below the video description of the video. Okay, one more question here right now. What if we go sideways up here? What if we start turning into a range? Remember, a lot of times they'll pop up, range, pop up, range, pop up, range. Okay, once I start seeing that range up here, you have to remember that ranges what? They love to rotate, right? It's the most important thing you want to think about when it comes to range. Now, I don't have a crystal ball for tomorrow. I don't know where that new range will be. We'll keep an eye on that overnight. The most important thing, though, is if we start going sideways into a range, and again, this will also apply to the S&P as well, the key is that ranges like to rotate down, up, down, up. Usually, it'll be roughly about the same amount. The amount below, the amount above, the amount above, the amount below. We like to use things like expanding triangles or megaphones. A lot of examples of these inside that free video course. So if we understand that basic principle about how ranges work, think about now finding, for example, a prior swing down here, get down underneath that range, get below a prior swing because we're grinding higher. And what do? We don't blindly buy this. We look for a bear trap. All we do is wait for that 21 EMA to come down, stay patient, let those bears try once, try twice. Now remember, this bear trap, where does it want to go? It wants to rotate roughly about the amount below to the amount above, right? So remember, this is why ranges are easier to make a lot more money with, because unlike on a straight pullback, we're not just trying to go back and retest the high, right? We definitely want to go back to the high, but now we'll go out, look for that bear trap, we'll look for that add-on. I'll tell you, if there's one scenario where an add-on entry is really worth looking for, it's during a range rotation, because we know now the risk-reward ratio still looks great on this, the amount below, the amount above. Folks, once you learn how ranges work, you'll be like me. You'll wish every day was a range-bound day. They're very easy to trade once you know how they work. The key is do not fall for that breakout, right? Almost every range breakout looks very convincing, but do not fall for that breakout. Even if that breakout goes all the way down like that, no, buy it back up again, right? Buy it right back up again, right? Do not fall for that breakout right now. This is not a bear market. Remember, tick charts are for entries. The hourly chart is for direction. You've got to burn that into your memory right now. Do not let deep pullbacks on the higher time frame fool you into thinking it's a reversal. Anyways, off my soapbox now. Bear trap, add-on, pendulum swing target, other side here. Now, let's kick this up one more notch, all right? Because this is where things get a bit more challenging. Oftentimes, we'll see a range develop overnight, tomorrow morning. We get a breakout going higher now. Now, again, we've had a very big move higher here. Be very careful if we see a well-defined range overnight. Be very careful chasing that thing going higher. Oftentimes what happens is we see price go up. We get what is basically a bull trap up there. Buyers try once, lower low. Buyers try twice above that high. We call these crown reversal patterns in the video classes, right? So crown reversal pattern, basically a bull trap pattern, lower low, above that high. Now, just a warning on this. These are counter trend trades. Half size position, quarter size position, right? For me personally, I always go a bit smaller size on counter trend trades like that. And if you're a newer trader, you might want to skip that one until you're making money consistently going with the overall trend. The most important thing though is now what's going to happen is the amount above, the amount below. Now, we always say the best entries are scary. This is going to be very scary. I'm going to warn you right now. This will feel like a reversal, right? There'll be some news involved. That knot in your stomach, that voice in the back of your head will say, are you sure you want to buy this? Yes, I do. Once you realize how ranges work, you'll know this is not a reversal. It may feel like a reversal, but it's not. It's simply it's a range rotation. So once we complete that pendulum swing, that symmetry off the top of that trading range, then all we do is we wait for the price to pull back. Again, we're not going to pick a bottom on this, okay? We got to stop with all or nothing entries, right? We're not YOLOing here, right, into these trades here right now because it may keep going. Remember, summertime markets, They love to make these big moves. This may come all the way down, right? All the way into that breakout pullback zone down there. And then once it starts pulling back here, you got it. Bears once, bears twice. I'll tell you right now, I love this trade right here. I would love to get a bull trap off the high or a fake out breakout off the high, a crazy strong move going back down again, and right when all the rookies start chasing after it, we're sitting right there to squeeze those stops, right? Basically pick the pocket of those bears here, turn those sellers into buyers, and of course, right back up we go here with a bear trap and an add-on. These two patterns, okay? These two patterns, the bear traps and the add-ons, you want to burn these into your memory, right? Bear trap, add-on. And again, I don't care how strong that move down is. It will be strong. The stronger, the better. Because then a whole lot of rookies who don't watch my videos, who use indicators for their timing of their entries, they'll get trapped right there, and we'll be there to take their money, teach them a lesson. Unfortunately, everyone has to pay their tuition to the markets, either find a mentor, right, or pay it with losses. Bear trap, add on. And again, if there's one scenario where you must add to your winner and leave a runner, it's always those range rotations, other side of that trading range. All right, guys, that's my game plan for tomorrow. Now, speaking of tomorrow, the place to be is in our trade room, 8 o'clock Eastern time. Guys, I can't think of any better way to learn this stuff. The easiest way to start making consistent money in these markets is to come out and learn and trade along with us in the trade room. I'll put all the important links you need to get started in the description of the video. Start first with the free video course. You're going to love all those trade examples I include there. Then come join us in the trade room and we'll do it together. In the meantime, y'all, hope you enjoyed this video tonight. Be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.